What do you make of the fact we're on a 3-day losing streak? The Santa Claus rally doesn't seem to be materializing. What does that mean in your mind for the year ahead?
Well, it's been a good year for risk assets. I think equity valuations look relatively expensive. Credit spreads are tight, and there's some uncertainty over the labor market and inflation going into 2026. And there's probably some form of rebalancing heading into the end of the year to prepare for 2026. I don't make much of it. It's not like it's been a major sell-off heading into the end of the year.
All right. So it seems like you're bullish on 2026. Your word of the day is prosperity.
Yeah, prosperity. I mean, the Greek writer Sophocles said, without labor, nothing prospers. And so I'm looking forward to working hard on behalf of my clients in 2026. And I expect you to be working hard too, Frank.
I hope to be working hard. Absolutely, Patrick. I want to get to just your broader sense of what's going on in the markets in these last couple of days. I know you say you're not putting too much weight on it, but the wild swings when it comes to metals, the fact that we got these Fed minutes that show a lot of the members would like to just kind of hold rates steady for quite some time, and the fact that there's no cuts really being priced in until probably like April. What does that kind of set us up for in Q1 of this year?
Yeah, I expect there could be some choppiness in Q1. After all, it's a midterm election year. Midterm election years tend to see, peak to trough, tend to see double-digit moves. And I don't expect any different this year. And so with a Fed cut expected possibly in April, I think there's going to be some choppiness. And you have to continue to look at the dollar. Right. So that's, perhaps there's been some rebalancing when it comes to metals. But again, I think inflation is just not priced into the market right now. And so that overall, I think could create, the most volatility for the market in the first half of the year.
All right. We had a guest on earlier, Doug Bonaparte. He said investors need to lean into that volatility for opportunity. Do you agree with that idea that you want to lean into volatility as opposed to some other strategies like an income strategy? We were talking about dogs of the Dow, not necessarily saying that one, but being more focused on dividend-paying stocks and value.
Yeah, I mean, I like value. It depends on the sector. So there's always going to be companies to buy, and so I would tend to say yes. You want to lean into those corrections to acquire companies and assets that you think are undervalued, and I expect to do the same when that comes.
All right, I want to get to your pick. It's Agilent Technologies, not undervalued, trading at about 22 times, so trading pretty close to in line with the market. What opportunities are you seeing when it comes to that name?
Well, overall, I think, the healthcare sector is undervalued. But when it comes to Agilent, I mean, it's an oligopoly, really. I mean, they make high-tech tools, for scientific labs. And so when you think about what their machines do, I mean, they're helping to analyze everything from cancer cells to pharmaceuticals to chemicals in food and water. So it's an essential business. And I think it'll expect to continue to grow in 2026, frankly, in the years ahead. And I think that the valuation is reasonable, all things considered.
All right. Is this part of what you're seeing as a broadening in the market? The fact that your pick, it wasn't one of the Mag 7 names, it wasn't something tied to the AI build out, especially after the news that we're getting today that ByteDance plans to buy about $16 billion worth of chips from NVIDIA.
Yeah, I think that's right. I think you're going to see a broadening out in the market. That's going to mean there's going to be rotation. So there may be some rotation out of those Mag 7 names where those, could underperform relative, to other sectors in the market. And like I said, I think the healthcare space is certainly ripe for that in the next year.